Hello, today is Tuesday, the 27th day of November 2012, and welcome to today's video. We'll start off within milk, move on to silver, and one of the setups became active today in the game that I've been playing. So, milk riots in Brussels. Farmers sprayed government walls and riot police with milk. Just when I thought I've seen everything or I couldn't see anything more creative in sense, here we go. The link for the video will be in the more information box. So they stated in RT's more info that it was low prices of milk to force them to riot. Now I found a milk chart on the internet and the link is in the more info. What you'll see on the chart is that milk prices are at the top end of resistance for the last 10 years and have been breaking out for the last year. Yet milk prices are so low. The interesting thing is this is price control, and we're seeing symptoms of such. And the symptoms of inflation is higher prices, not higher prices itself being inflation. So therefore, what Peter Schiff and other analysts have been saying about inflation for years is that it's going to be catching up. Well, it is doing just that. Let's take a look at silver now on the daily chart. So on Friday, the breakout appeared. Yesterday was such a unvolatile day, and so far today is the same thing. In fact, since this point here, the last 6 sessions, there's been 5 extremely unvolatile days. But as far as the price action is concerned, the Fibonacci level here shows that possible breakout. It's gotten by this level. The next level after this is 33.95, and it's holding up well amongst that as well. I like how this is holding up. And I said last weekend, as far as that game, I'm waiting for silver to come back to 33.50. It may do that. It may not. Very difficult to tell, but I think if it does, there's a decent shot that's an area of a bottom. So therefore, the way that the game is played is Oat wins, 2 losses. This is the third setup now, which will be EG2 with EQT. Wow, that was hard to say. It was just 3 letters. EQT. And what's going on with EQT? This is the hourly chart, and what I had written down, I didn't state it, but I showed it on the weekend, is that it must not break 63.60, which it did not. It must retrace 38.2% from the 58.09 low entry, which it has done. That was currently set at 60.92, which is in play. Stop 1 is 55% of retracement, currently at 60.13. So that would be the first stop area. So half of the level would be stopped then. Stop 2 is at 66% at 59.63. And so on and so forth. So as far as the chart is concerned, there was the entry. Now, that's just interesting. Look at this as far as message of the market's concerned. You do have a situation where you find this level, and you did bounce from 60.92 at least up to 61.15. So that's like 1/3%. It's not that much, but it has at least once bounced from that level. So now when you have that bounce come back and then you go down and you don't find support at a level like that, you're at the point A, is this going to be that failed breakdown, which if you were going long there, that's all you can hope for now. Is it going to be resistance at that level, and so on and so forth? If you're adjusting to the message of the market, one of the strategies is if you buy here, then it comes back close to break even, you get out. But you know what? This is only a game, and we'll see how this thing plays out, and I'll update you on this when the first half of the stop or profit comes into play. Take care.